Folks, good morning and welcome to Swing Trading Today. This is Bob Desmond and it is Tuesday, March the 23rd, 5:30 in the a.m. Eastern Standard Time. So this morning we're going to talk about economic data that's coming out. We'll go to the pre-market activity. And of course, we will talk about our members' stock chart requests. So before we get to our topics this morning, let's talk about our sponsors over at TrendSpider. Folks, if you're not using TrendSpider, you're missing out on automated technical analysis that your competitors in this business are using. We finally have a tool out there that the professionals have had for years, now made affordable to the little guy. So automate your grunt work, speed up your technical analysis, and by speeding up your analysis, you must be able to improve your accuracy, or else there's no sense in driving towards efficiencies, because you must be using a product that reduces costly analytical mistakes, and TrendSpider fits the bill. Find winning chart setups with their scanning software. Time your trades with precision using their trade alerts. I use them all the time. You'll see me using them later on in this demonstration. Take advantage of their 7-day free trial offer. Take a demo tour, and you're never left on your own. Go to their TrendSpider University, tons of tutorials. And you can also reach out to them for guidance. Great guys. Dan, Jake, and team will hold your hand through the process. And they also have a very active Twitter feed, so you can follow them on Twitter. I mean, these guys are always on Twitter, posting new charts. Just go to the bottom of their page, and you'll be brought to their Twitter feed. So let's get to the economic data that's coming out today. Not much, really. Current account deficit, that's a joke. All it is getting bigger and bigger. Unless they really blow it out well beyond what the expectations are, which are current $187 billion, which is just simply an amazing number, but we've become numb to it. New home sales coming out as well. Existing home sales were not good. They expected a read yesterday of 6.5 million existing homes sold. That number dropped to 6.22 million. Now, with the economic data coming out as weak as it has these past several days, and jobless claims coming in at well over 700,000 initial jobless claims every week, I don't understand how they get to GDP 4.9% for Q1. It'll be interesting to see how we arrive at that number. And then they're expecting a July read of 7% and an October read of 6.8%. You can't make this up. I've been talking to members about this, that the economic data is so weak that the path of least resistance for me remains to the short side. Speaking of being short, let's take a look at the pre-market activity, because it is not wonderful. Yesterday, after we saw a pullback in the US dollar, a pullback on yields, we knew that going into the week that we'd probably see some weakness in the yields because they became overbought. But they pulled back only slightly, yet you saw a big bid on the NASDAQ 100. Now, what we're looking at here on the NASDAQ 100 is the potential. Yes, we're short, but we want to keep an eye on the exit door at all times. We have the potential for an inverted head and shoulders setup. Left shoulder, head, right shoulder, and here's our neckline. Now, if we happen to break out and above this line in green, well, that's a breakout above the neckline on this 4-hour chart. But what we're seeing this morning is weakness. And when you drill down and you take a look at, let's go to a 15-minute chart. Yesterday, we rallied up to what was support back here on the 17th, then again on the 18th, acted as resistance, not once, but twice. And now we have rolled over a bit. Now, it's not a major sell-off. We're down only spot 3.7%. So it's way too early in the day to identify how we're going to close out the day, but the open is looking pretty weak. But that could change quickly. Now, before we go to the other sectors, I want to take a look and see what the 10-year Treasury note is doing. And it is up. And in fact, it has broken out. Let's go back to a 4-hour chart. Nice consolidation here. Nice breakout. This means that yields continue to either flatten or pull back on the 10-year Treasury yield. That is good. That is bullish for technology. Not as bullish for the cyclicals. So the NASDAQ may catch a bid later on this morning. We're not ruling that out. Let's take a look at the Russell 2000. It continues to weaken up here. It was weak all day yesterday relative to the rest of the market. And we just hit the lows of the session. We are currently short of the Russell 2000. We are down 1.06%. RSI is very weak. On a 4-hour time frame, we are at 32 on the Russell 2000. And we have what you would call a bull trap or a breakout point failure. Meaning we were in this trading range. We broke down below support in red. We rallied back to even break out. Here on the 10th, rallied, rolled over, and then failed. And we backed down into this trading range. That's a breakout point failure or a bull trap. Very negative, and it implies that usually at a bare minimum, you're going to retrace back down to prior support, and there's a very strong chance that this support level breaks. So be careful here. What may look like a buying opportunity may not be. Do not go buying this market during the first hour of trade. There are way too many buy the dippers out there that do not appreciate the valuations of this market and that the damage that rising interest rates can have on share buybacks, which have been driving up this market for many, many years now. So don't be the guy or gal that is left standing when the music stops. That game of musical chairs does not end well. There will be opportunities. We're building a watch list of high-quality stocks now, and when it's time, we will take advantage. The S&P 500, we have the potential here for a head and shoulders setup. Left shoulder, head, right shoulder. Here's your neckline in yellow. If we break down below 38.89, the S&P 500 is in trouble, but we need to close down below that mark. Trading intraday below it just won't cut it. We did that back here, it didn't matter. We did that back here and here, it didn't matter. We rallied. We need to close down below that mark. Again, this is a 4-hour chart. The US dollar, very strong this morning, folks. Back above 92. Money's coming out of stocks into the US dollar. Also, the Europeans, the EU, they're doing more debt buying. What is that doing to the euro? It's killing the euro. Money is finding its way into the US dollar. What does that mean for gold? Gold is down slightly. It rallied back off the lows of the session from Sunday's open into Monday morning to close down slightly yesterday. We'll see how gold holds up in the face of a rising US dollar. If there's fear in the street, as it appears may be developing, gold and the US dollar for a period of time can rally in tandem, but it won't last long. Don't get used to it. Silver remains weak, down just shy of 0.75 percentage point. I would not be a buyer here. We spoke about this on Market Wrap with members last night. Oil, really taking it on the chin now. Head and shoulders set up, left shoulder, head, right shoulder. Neckline is, let's put it right here. At around $58 the barrel. We are currently at $59.28 the barrel. Light sweet crude. So oil coming under a tremendous amount of pressure, down over 3 3/3% this morning. Let's segue over and into our member stock chart request. But before we do that, let me draw your attention to our free 5-part video tutorial on my 5 top favorite candlestick patterns. If you're watching this video on YouTube, simply scroll down to the video description area. Click this link here. You can do the same if you're watching this on the website. You will not be spammed. You'll also get alerted as to when we go live on Thursday nights as well as Sunday nights on our YouTube live stream. We have a great time. Love to have you there. Let's move on to stock chart requests. Okay, I have symbols from Cena, APT, Tuan, SQ, CURO, eBay. And for John, we're going to go over the US dollar versus the Turkish lira. But first I want to kick it off with SJT. We talked about this over the weekend as a watch position. And I just want to illustrate why it's so important to wait for these retests of breakout points and to wait until the final minutes of trade prior to entering a trade, because you can get head faked. Now, on Friday of last week, we broke out on SJT, a very bullish setup. Then yesterday, I had an alert set here. It's fired off. That's why it's not set any longer. We had an alert that fired off saying that, okay, we're retesting the breakout point, meaning this line in red, which we broke out of, we were pulling back to do a retest. Remember that traders are OCD. They want to retest what was resistance, and it should now act as support. What happened? We failed to hold it. We retraced back down to this lower band of support. This is the value of automated technical analysis using TrendSpider. Click of a button. On, off. There you have it. So does this hold? We're not quite sure. So we're going to watch this further. We're not going to hope that we rally back, because hope is not a strategy, especially in this market. So we will continue to watch SJT. So members, more to come. We'll send out a trade alert if and when we do execute on this trade. Moving on to members' chart requests. APT for Cena. Let's go to a monthly chart. I know we've gone over this one before. All right, so a lot's changed since we last went over this one. We're putting in lower highs now. And at current, on a monthly time frame, we are barely holding on to support at around $10.50 per share. What did we close out yesterday? $10.52 per share. Weekly chart. We saw okay price action last week. And the only reason why I say that is because the prior week, we broke down below support and closed there. But we managed to bounce back last week. The reason why I don't love this candlestick is because you saw sellers selling into strength. You never like to see that, and you saw it again yesterday. So I'm worried that this support level at 10.50 is under pressure and may not hold. But we don't want to panic. If I were long of APT, I would tighten up my stops. I think given the market environment right now, we're seeing a little bit of weakness, and we're seeing lower highs and lower lows on APT. I would use a fairly conservative stop point. I guess the lows of March the 17th look interesting. That low is at 10.35. Let the market take you out. I would be a buyer if we begin to see this support level defended further. And rather than seeing topping action, meaning selling off the highs of the day, we see buying off the lows of the day, like you saw here and here. So I would avoid these shares at current. The next chart up is Square. Healthy consolidation. We're down on the month, but we're holding pretty firm support at around $206 per share. Weekly chart. We're holding these rising moving averages. We've had some support that's built up at around $216.59 per share. If you're looking to open a position and you're going to use a stop right below that level, I'd be okay with it. And I would look to add more on a breakout above this resistance level on a weekly time frame. We'll keep this active for a couple of weeks. Daily chart. Yeah, we're in a very tight wedge formation. The problem here, from a short-term perspective anyway, is that we broke out above daily resistance on the 15th, and we couldn't hold it. We broke back down into this trading range, which is usually not good. That's a sign of selling pressure above. You have more bears than bulls. So I would either wait for 216.50 or 208.50 to get hit prior to opening up a position, and then add on a breakout above resistance. If we don't get the pullbacks to support levels and we break out, that's pretty healthy. And you can look to open up a position there. But I would build on strength. Open up a small position on a breakout. Add more once we get above these volume shelves up here at 244 and 251.70. So no great rush. Let the shares in this market environment show themselves worthy of your investment dollar. You don't have to prove anything to Square. It has to prove it to you that there are enough bulls to take these shares up above resistance levels. The next chart up, Curo Holdings. We are seeing, this is a monthly chart, we are seeing higher lows get put in here. We have a triangle formation which is formed. We've been consolidating for several months now. We are in the middle of a trading range, no action to be taken quite yet, either long or short. Weekly chart, again, we're in the middle of a trading range. We have put in, I believe, let's validate this, a new weekly low. Last week's low is 14.17. No, not quite yet. We're 3 cents off. So watch for a new weekly low here. RSI is going in the wrong direction, but to be fair, this is a momentum indicator. It's trading sideways, consistent with the share price. So I wouldn't read too much into this. Daily chart. On a daily time frame, we may be having an interesting setup happen here, possibly a W formation. Here's the left side of your W, center or pivot point up here. Let's memorialize it. There you go, 16.50 per share. Are we going to put in a higher low? Maybe. We do have a lot of resistance above. We did see some topping action, meaning some sellers at the strength yesterday. It was an update on light volume. I don't see a compelling reason to step in right here, right now. I would wait and see if we get a further sell-off with the market. Do we touch or bounce off of this lower band of support? Keep a little bit of sensitivity. And frankly, I would set this alert and forget it. And that's how these alerts keep you out of trouble. No sense in staring at a computer screen all day long, waiting for it to come to you. Let the alerts do the work for you. Because by staring at the screen, watching a stock, it could result in impulse buying or selling, and that's simply not good. Next chart up is eBay. Monthly chart looking pretty good. We reversed to retest not one support level, but two. Very nice. We had broken out back here in January. Follow through, but a reversal in February. A pullback on that reversal in March. However, we've reversed to close up on the month. We're just off the highs of the month. Very bullish. Weekly chart. We have broken out on a weekly time frame. We have a continuation breakout this month. Excuse me, this week. Apologize. Daily chart. Now, here's where the automated trend lines come in handy. I'm going to take them off, and now I'm going to throw them back on. And you can see that right up here at around 61.64, we have a rising resistance level. We closed out yesterday at $60.29, so not enough reward for the risk I'd be putting on. What I would do here is I would wait for a pullback and a retest of this breakout point, see if it holds, and we'll keep this active for the next few days. Touch, bounce. Because I really like the monthly chart. In fact, I'm going to keep this active for a couple of weeks. Because if the market rebounds, eBay should do fairly well with that monthly view of that reversal bar, bullish reversal bar. All right, we're going to leave off with the Turkish lira versus the US dollar. So if you see, as we're seeing now in green, that means that the US dollar is outperforming the Turkish lira, and the lira is declining versus the US dollar. This is a one-year view, I believe. Let's validate that. Yes, a one-year view. Pulling back to a 5-year view to get a feel for where we've been. We're well off the highs for the dollar relative to the lira, but the trend is clear and defined. It's still up for the dollar versus lira. The lira continues to weaken. Drilling down to a 3-month chart, we saw a spike up higher yesterday on the US dollar versus the lira. However, that strength in the US dollar has faded somewhat over the past couple of trading days. This was actually Sunday evening, I believe. Yes, it was Sunday evening. And we have faded some on the dollar versus the lira. So the lira appears to have stabilized. However, it has not broken out yet. And the path of least resistance remains negative for the lira versus the US dollar. And with that, folks, everybody have a profitable trading day. Thanks for joining in. And I will talk to you soon. Be well.